Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft, and for more than 10 years with SNN, I've been doing interviews with MicroCap management teams at investor conferences globally as well as online. Our SNN Live CEO video interviews are meant to pique interest, and then one can discover more by going to that company website. But personally, I always have more questions I want to ask. On this show, I'll be chatting with public company executives from microcap companies, and we'll dive deeper into companies that are rarely profiled. Microcap traditionally is overlooked, unloved, and absolutely never featured on legacy financial media outlets unless something material is going on. That's a good story. With my experience interviewing management teams, having interviewed most of them before, I've built up a network of companies, so there will be no shortage of content. Furthermore, this is an opportunity for me to showcase some of the qualitative lessons I've learned from guests on the Planet MicroCap podcast. You can expect high-quality interviews with management teams that may have exposure to broader macro trends that you may never have thought of. One of the many reasons why I love the microcap space. So if you love microcaps and especially love learning about companies before the professionals do, let's start our due diligence. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Ed Richardson, Chairman, CEO, and President of Richardson Electronics. It's a publicly traded company. The symbol is RELL on NASDAQ. Richardson Electronics is a leading global provider of engineered solutions, power grid and microwave tubes and related consumables, power conversion and RF and microwave components, replacement parts, tubes, and service training for diagnostic imaging equipment and customized display solutions. For 75 years, the company has been a provider of power grid and microwave tubes and serves customers in the alternative energy, aviation, broadcast, communications, healthcare, industrial, marine, medical, military, scientific, and semiconductor markets. The company's strategy is to provide specialized technical expertise and engineered solutions based on their core engineering and manufacturing capabilities. The company provides solutions and adds value through design and support, system integration, prototype design and manufacturing, testing, logistics, and aftermarket technical service and repair through its global infrastructure. I've seen Richardson Electronics at a number of conferences over the years, so it was great to get Ed and COO Wendy Diddell on the podcast to discuss the company's 75-year history and Ed's 60-year career with Richardson Electronics, helping investors make sense about the company, why engineered solutions is simple, and Richardson's growth opportunities and tailwinds driving those prospects. With that, please enjoy my conversation with Ed Richardson, Chairman, CEO, and President of Richardson Electronics. Welcome back to the Due Diligence series on the Planet MicroCap podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me today is Ed Richardson. He's the chairman, president, and CEO of Richardson Electronics. It's a publicly traded company. The symbol is RELL, RELL on NASDAQ. Ed, thank you so much for joining me today. How you doing?
Thanks, Robert. I'm doing great.
All right. Well, look, I've known the name for a while. We were just talking offline about a few colleagues that I know have been following the story, and that's how I was kind of introduced to Richardson Electronics over the years. So, I'm really excited to have you on here so that, I can ask you a few questions myself. Hopefully nothing too crazy that you've heard in the past already. But, how I start off every interview here is, can you describe what the company does or describe the company or what it does in that one sentence? And then we'll go from there.
I think I would use the phrase that we use a lot, and we call what we do in concept is engineered solutions. So over the years, we built a company with probably 100 engineers, and companies are always coming to us and saying, we need this particular device, some kind of module. Can you design it for us? And we never have enough sense to say no. And I can tell you that we've designed a lot of these products that were a dead-end street. They never went anywhere. But on the other hand, there's been a few that have turned into real home runs, and probably the biggest example we'll talk about is ultracapacitor modules to replace lead-acid batteries, primarily in wind turbines. So that whole business is amazing growth for us, and green energy has become a very important part of our business, and we'll tell you about that. But this all comes from engineered solutions, just customers. We have 20,000 customers all over the world. We have 24 foreign subsidiaries. This year is the 75th anniversary of the company, and I've been in it 60 years. So it's taken us 60 years to get it right.
Look, well, firstly, congratulations. I believe when we were talking offline, it's the 75th year anniversary, right?
Yes.
That's what you just said. And it's a family business. Yeah, I think you were telling me offline that you've been in it 6 years. I hate to ask you, because I was joking with you that you're probably going to have to tell me the story again, because you just told it to me offline, but love to hear how you came into the business. And because that's also ties into what the original thesis for Richardson Electronics was and how it's evolved over the years. So let's start there.
Sure. Well, my dad, during World War II, he worked for a company called Majestic Radio. And after World War II, his job was to terminate war assets. So he was primarily selling surplus electronic components. And in 1947, Majestic Radio went bankrupt. And they owed my father some money. And at that time, he took electronic components for the money they owed him. And he incorporated his own name. He called it Arthur H. Richardson Incorporated. And we had a little family farm. We had 33 acres in Wayne, Illinois, about 50 miles west of Chicago. And my dad believed that you should be self-sufficient. So we had pigs, chickens, lambs, turkeys, you name it, horses, dogs. We raised all our own food. And Dad took a barn, a little red barn that had been used for raising turkeys, and cleaned it out and made that the start of his business. He moved all these electronic components into that barn. And on weekends, my brother and I have an older brother, he's 3 years older than I am. We had to work for my dad and clean tubes and package tubes and put them in boxes and test them and so forth. And I frankly hated it. I wanted no part of the surplus business. What I did like is I really enjoyed dogs and horses in particular, and wanted to go into veterinary medicine my whole life. Went to a prep school in Connecticut for a number of years and did pretty well in that school. And I was admitted or accepted to both Cornell and Iowa State University. And I chose Iowa State because they were large animals, and I really wanted to end up being a horse vet. So I started in veterinary medicine school, was there less than a year. They were on a 3-term system, and I got mononucleosis and came home. And they told me not to come back until the fall quarter. And after about 2 or 3 weeks, I was healthy. And my dad said, well, you're not going to sit around here. You're going to go to work with me. And I went into Chicago. I thought, oh, God, I don't want to be in the surplus business. And 60 years later, here I am. So.
It's a great story. Was there at any point during these 60 years where you're like, maybe I should have gone back to veterinary school? I mean, it's a tough business at certain points, electrical components and figuring out what everybody needs. But at the same time, I can see that as being fun as well.
Well, we had some ups and downs, that's for sure. And I don't want to get into that part of the history, but we got into an antitrust case, believe it or not. I was told, and when we got in the business, the tube business wouldn't exist in 10 years, that everything was going to be replaced with semiconductors. And to give you some idea, our tube business this year went from $100 million to $120 million, and we have more orders than we can fill. So, but at one time, back in the late 80s, the U.S. Department of Justice decided that we had bought too many of these companies and that we were, sort of an antitrust area where we were taking over the industry and raising prices and so forth. And we spent 3 years fighting that and $10 million. And I didn't think we were going to make it, but what it did do was to make us diversify into a lot of other businesses.
Absolutely. So as you said, the kind of the original problem, back 75 years ago was taking, all of these, basically all those materials that was from World War II and basically repurposing it. So how would you say that idea, that original idea has evolved over the years and to where you are today?
Well, the first thing we did is, my father taught me that although he had basically was selling to other surplus dealers, that there were users out there that we could sell. And we started with the broadcast industry was the first, 10,000 radio and TV stations in the United States alone. And they all were using transmitting tubes to broadcast their audio or video signals. So we started out, we ended first with a line from a company called Varian. The line of products was called IMAC with transmitting tubes. And I started calling on radio and TV stations to sell those tubes. And it worked. We actually got an award called the Golden Tetrode for the number of tubes we sold the first year. And then we just went from there. We went from broadcast to airlines, railroads, steel mills. They're all using tubes of one kind or another in their systems. And today we've got 20,000 customers all over the world in 24 foreign subsidiaries. Actually, 60% of our business is outside the United States.
Okay, so let's dive a little deeper into the business itself. As you said, you have about 20,000 customers, 24 foreign subsidiaries. And, we were joking offline again, how, if we wanted to go through every single component of the business, it might take us 5 hours. But simply put, what would you say is the core business itself, and how you're adding on, how these additional subsidiaries add to what the core aspect of Richardson Electronics does, if that makes sense?
Well, let's see. First, we have three major companies. There's one called Canvas, and Canvas is pretty easy to understand. They make displays, custom displays, primarily for medical OEMs. So every one of the displays they design are engineered for a particular OEM, and they go into healthcare equipment. For instance, we sell to Medtronics. And Medtronics has a system, it's a robotic laser guided surgery that the surgeons use our display to operate their surgical tools. So that's going into a system that's several $1 million, and our display is a few $1,000s. But once you're designed in, it's FDA approved, and that business goes on for many, many years. We sell a display to Varian Medical, for example, that goes into a linear accelerator for cancer treatment. And we've been selling them that display for over 10 years. So Canvas sells to Medtronics, Varian, Stryker, Carestream, all of these medical OEMs. We have a unit in Down-Esch in Germany that does design and assembly work. And we have another unit outside of Boston in Marlborough, Mass. And that business is about, this year, finished the year at $35 million. But they have about a $50 million backlog, and we think they'll do about $40 million this year. And that's probably the easiest business to understand. They're all medical grade displays, custom designed for particular OEMs. Then the second business we call the healthcare business, and Wendy actually runs the healthcare business. So it's Richardson Healthcare. And a number of years ago, we had sold off the largest business that we had. It was called RFPD. We sold to Arrow for $238 million. And we looked at the business and tried to decide what we could do, what we wanted to do when we grew up. And we decided to get into the CT tubes. The one business that was really going in the tube industry were CT tubes for X-ray, which in total was the service and OEM business, that business is about a $9 billion market. So we built a $35 million factory within our factory. By the way, this factory is 250,000 square feet, and it's located on 120 acres of the property about 50 miles west of Chicago. So within it, we built this factory to build CT tubes. And we have the capacity, probably the most modern CT factory in the world. We have the capacity to build about 1,000 tubes a year. And we started out copying Canon tubes, and we've developed two of their tubes, a 750D and a 750G. And we're now working on Siemens, and Siemens is much larger than Canon, probably 10 times larger than Canon. But the fact of the matter is that we're building less than 300 tubes a year, and of the one business, we're losing about $5 million a year in that business. But we made $15 million last year, even with a $5 million loss in healthcare. And our business was up from 176 million to 226 million on our fiscal year. A year goes from June 1 through May. And we're just finishing our first quarter of fiscal 23 today, as a matter of fact. And we think this will be another record quarter for us. So we're doing quite well. So then within the business, you've got the healthcare piece, and then there's what we call the Power and Microwave Technology Group. And that's the core two business, which is EDG, the Electron Device Group. And as I mentioned, that business went from 100 million last year to about 120 million this year. And we have a tremendous backlog in that business. So to give you some idea, we make magnetron tubes, and probably the most popular application for our magnetron tubes today is making synthetic diamonds. So they use a 6 kilowatt tube at 2450 megahertz, and they hit carbon with that, and they can build synthetic diamonds up to 3 carats that are absolutely perfect. They have no fluorescent, they have no inclusions, and the color is perfect. They're actually better than natural diamonds. And that industry has really become popular, particularly in Asia. And so we in this one particular tube, we were building about 800 a year, and this year we have orders for 5,000. We can't build them fast enough. Wow. And then we build magnetron tubes that are used in weather radar systems, and our biggest customer there is Garmin. And Garmin's business this year was up about 30%. And we also sell to Honeywell for executive aircraft. So we sell just about every kind of tube that's made. We either manufacture or have exclusive agreements where people make tubes for us. And that total business, as I mentioned, is about 120 million this year. The biggest segment is Lam Research. So in this case, we build RF matches and other microwave devices that go into semiconductor wafer fabrication equipment. And our business with Lam is the largest manufacturer of semiconductor wafer fabrication tools, and they sell to people like Intel and Samsung. And that business this year went from 22 million to 27 million. And in this last quarter, we were up to 11 million, and that business is growing as well. And then in the other, we sell all kinds of industrial tubes that are used for induction welding, for laminating plastics and plywoods, CO2 laser cutting, and that all comprises the 120 million. And then we have PMG, which is the Power and Microwave Group. And this is the area with probably the most potential growth. And here we designed a tube that goes into wind turbine applications to replace lead acid batteries. So we take an ultracapacitor, and there are 6 of them in each module, and then we designed a integrated circuit that goes on top of it, and we have 2 patents on that particular device. And we started out selling into GE wind turbines. And how we got into this business was years ago, we distributed for a company called Maxwell, and they made ultracapacitors. And Maxwell was bought by Tesla about 5 years ago. And when Tesla bought them, they took them out of the commercial business. They wanted their production only for their automotive industries. So we were looking for we had about a $3 million business in ultracapacitors. And we found a company that was a division of LG in Korea that's called LS Materials. And we took our $3 million worth of business and wrote an exclusive agreement with them for green energy, primarily wind turbines, but also cellular base stations, anywhere that the ultracapacitor can be used to replace lead acid batteries. And here again, we talked about engineered solutions. A company called NextEra came to us, who's the largest wind turbine operator in the United States. And they asked us if they had tried to deal with Maxwell to replace the lead acid batteries in the GE turbines, but they went to LS Materials in Korea trying to find another source, and they were referred to us. And so our engineers worked about 2 years on designing this ultracapacitor module that we now have a patent on that goes into GE wind turbines, and there are 18 of them in each wind turbine. And the total cost to replace all 18 in the wind turbine is about $10,000. Mm-hmm. So the first year, NextEra gave us an order. They have 10,000 wind turbines in operation, and they gave us an order to cover 1,000 wind turbines for $10 million the first year. And now all of these companies in that business know each other. So there's a list of companies like NextEra, they're called Invenergy, Avangrid Renewables, RWE, Enel. They're all buying from us now. There's 30,000 GE wind turbines in operation in the United States.
Ed, I have to ask, and this is going to sound rudimentary. How do you keep track of all of it? I know it's your job to keep track of all of it, but it's a lot. Let's be real. I mean, thankfully you got Wendy back there helping you out, but I'm just saying.
We have about 450 employees, and as I mentioned, about 75 of them are engineers, and they make all this happen. I just take credit for it.
Very good. All right, so I want to get into the competitive landscape, and now we won't go through each line of the business because I'm sure each one has quite a few competitors within that. But I guess from a public perspective, when you think about Richardson Electronics, do people put you on the same competitive sphere as other engineered solutions companies or other tubes companies? How do folks tend to think about Richardson Electronics within this ecosystem that we're in?
Well, I think that's part of the problem. Particularly the financial world doesn't know what the hell we are. We're in so many different businesses, they can't figure it out. It depends on what you're looking at. As far as the tube business and EDG, we have very little competition. It's only about a $400 million market, and half of that's military, which we don't do much in. And the commercial market, which is the other half, we have $120 million of it. And we have very, very little competition in that business. On the other side of it, when you look at the display business, all the companies like Samsung and Panasonic and LG, they all make displays. Where we fit is custom in small quantities, up to 2,000 or so, and very custom displays. But when it gets into a large quantity, these companies will set up to make those displays as well. So there's, it's a huge market, but we just fit in a particular niche with medical OEMs. And we're sort of below the radar when there's less than 2,000 of a type built a year. On the other side, EDG, as I mentioned, we have very little competition. But when you get into the PMG side, we also distribute components for people like Qorvo and MACOM and Fuji. And there's lots of competition there. Arrow and Avnet, Future, they're huge distributors that are all in that business. Our claim to fame is engineered solutions. We're actually an extension of our customers' engineering departments, and we go in and help them design in the leading edge product for their circuits, and we get a premium for that, but it's still a very low margin business. That's the business I sold once before, but the fellow that ran it, Greg Peliquin, he went with Arrow for 3 years and then called me one day and said, I really don't care for working for a $25 billion distributor. I'd like to come back. All the non-competes are up. And so he came back and started over again and brought about 15 of his engineers with him. So we're back in that business as well. But that's how you get to meet these customers like NextEra. They're one of 20,000 customers that have come to us for some special engineered solution. And as I mentioned, some of them are dead end streets, but this particular one with the wind turbines happened to be a home run.
Let's talk about the moat a little bit for Richardson Electronics. I mean, don't get me wrong. I know tons of kids my age that grew up saying, I can't wait to be in the tubes business. But, from your experience, I mean, is it because the company has been around 75 years of experience, all these different engineered solutions, over 20,000 customers? I mean, let's get into it as to what people perceive to be that moat, that why Richardson Electronics has some of the growth opportunities that we're also going to talk about after this question.
I think it's our engineering base that we've been built over the years, and our habit of never saying no. We always try to, the title to my book is Never Give Up. we always try to go in and see if we can't help them, and that's how we keep 20,000 customers, and that's how we keep 450 employees.
Very good. All right, so let's talk about the growth opportunities. I went through your investor deck a little bit before our conversation today, and it seems that within each segment there's opportunities for growth. So can we talk through some of those?
Sure. Well, the one we're probably most excited about, we already talked about, was wind turbines. And now anywhere that there's a UPS, an uninterrupted power supply, there's a lead acid battery behind it. And those only last about 2 years. They're very, they don't handle temperature well, things of that nature, where the ultracapacitor has a life of 10 to 15 years. We've gotten into a partnership with a company called Battery Street. And these are fellows that had designed a ultracapacitor module to replace the UPS lead acid batteries in cell towers. So you've got in the United States 300,000 cell towers, and at the base of each one there's a UPS, and a ultracapacitor module can replace it for about $500. So that's so far we have them in beta sites with is it Verizon? T-Mobile and Verizon and AT&T that we're working with. So we think that will be a good market. And then in the wind turbine market, so far we've only dealt with GE, and they have 30,000 wind turbines in the United States, which, we are just getting access to. But now Siemens has come to us, and they're actually twice the size of GE. And so we're working on a design for them. In this case, they want to buy it as a private label. They want us to label it Siemens. They want to handle their own OEM and aftermarket business, which is fine with us. So that could even be bigger than GE. And then you had even a larger manufacturer is called Vestas that makes wind turbines. And we're talking to them as well. So we think that that market has a huge future. And then we've gotten into a similar application, but in electric locomotives. So a company called Progress Rail came to us a few years ago, and they're building locomotives in Brazil, primarily for the Australian market. And they had seen the press releases on our ultracapacitors that would replace lead acid batteries. And they were trying to replace lead acid batteries in their locomotives that they manufacture in Brazil. And our engineers looked at it and said the current's too low, that you can't really replace it with an ultracapacitor, but you could replace it with a lithium iron phosphate battery. And we have an agreement with Amogreen Technology in Korea, similar to what we have with LS Materials for the ultracapacitor for those batteries. So they started designing the batteries in their electric locomotives in Brazil, and the fellow that's head of their supply chain lives about 5 miles from our factory here in LaFox. And we told him, it's 35 weeks delivery on those batteries. You really ought to forecast how many you use a year and place a long-term order so that you guarantee the price and you can get delivery. Well, he gave us an $18 million order, the largest order in our history for those batteries about 3 or 4 months ago. And those all go to Brazil. But now the American customers for electric locomotives, they want the locomotives built in the United States. So Progress Rail is going to build their locomotives in Indiana. and they've come to us and asked us to build the battery compartment that they build in Brazil. So they've actually given us prints, and we're copying what they do in Brazil. And now they've given us beta site orders for 4 locomotives. And the battery compartment in each locomotive is a little over $1 million. And they intend to build about 50 locomotives in the United States over about a 3-year period of time. And if we're successful with the first 4 beta sites, we should have access at about $1 million a piece to that business. And Progress Rail is a division of Caterpillar. And to give you some idea, the battery compartment that we're going to build here is about 4 foot square by 6 foot high. And it has lithium is very sensitive to fire control. They can catch fire. So it has a fire extinguishing system within it. And there are 162 of these battery modules in each compartment. And all the cabling and the fire control systems, when we finish with it, it weighs 11,000 pounds. And we had to build a new shipping dock to handle this. So in my thinking, in the not too distant future, Caterpillar and Progress Rail are going to be our largest customer. So these are the kinds of things we're working on. And you look at this, people say, well, what the hell kind of business are you in? You're in all these different businesses. But that's what makes the company so predictable. You know, with 20,000 customers, you can get a downturn in one business or another. But I look at it like a table with 6 legs, you know, and right now, 5 of those legs are on fire. So we're doing really well.
So my next question, because, you know, I've interviewed a few, they not necessarily describe themselves as engineered solutions, but I guess it's more or less the same at various scales, you know. And one question I always have for them is, you know, how do they determine, and this question now I'm asking you, is how do you determine what customer you want to work with? You know, is there a certain threshold? Do you do some due diligence on the industry that they're looking to sell, whatever they're looking to partner with you want to build? You know, how do you determine what customers you do want to work with and others that you're saying, you know, come back to us?
Well, you know, obviously we draw some parallels when we work with one like GE wind turbines. The first thing we did then was to go to Siemens, and now we're going to Vestas, and we go to the other wind turbine manufacturers and operators as well. But to tell you the truth, it's not rocket science. The customers find us. You know, we've been around for so long, and we've developed a reputation for engineering. It's their customers just coming to us.
I mean, is there anything too small that you'd say, nah, we don't want to deal with that?
Oh, I don't know. I think we're pretty stupid. We try anything.
Maybe in the canvas business, we want to.
Yeah, in the medical display business, if the quantities are too small and it's not it's a off the shelf kind of LCD, we wouldn't touch that either. So they have to be very custom.
Got it. Well, this is one of my favorite questions to ask on here. And I think this is a particular, it makes a lot of sense to ask you. What do investors get most confused about when they think about Richardson Electronics? Liz, I know you go to a lot of these conferences, you do a lot of the one-on-ones. So, I mean, what types of questions do you get asked most of the time?
Because we're in so many businesses, it's hard for them to grasp what the company really does, you know, and it takes, even with this interview, it's a very complicated story. We're in so many different areas, and that's the most difficult thing, is trying to get a picture across to the customers. All they have to do is to look at last year, we went from 176 million to 226 million, and our backlog went from 176 million to 206 million, to see that we're doing something right. It took us 60 years to get here, but you don't have to understand all these various businesses to see that it's working, and working pretty well.
Absolutely. I mean, what's so confusing about engineered solutions?
There isn't.
You know, I do have to ask, but because, you know, in engineered solutions, you mentioned that there's some certain aspects that are low margin parts of the business. I mean, is that the part where people get, you know, I'm sure you have some of those investor meetings that are like, all right, you know, okay, you make money. Oh, wow, 1.7, 220, great. But, you know, you're making this much net income. Like, is that, do you have that conversation quite a bit?
Yeah, I mean, they look at the business. I think probably the most critical area is, as we said, we're still losing last year about 5 million in the medical business, and they say, why do you stay in it? You know, either get rid of it or make it work. And we think within the next couple of years, as we can, you know, as I mentioned, that we have a capacity to build 1,000 tubes on 3 shifts, and these tubes sell for $75,000 a piece, by the way, basically. And if we can build the volume up even to 500 tubes, we can start making money in that business. And if that happens, then you can add another 5 million to the bottom line.
Absolutely. This is a kind of random question. I don't know if you've ever been asked this before, but have you ever thought about spinning out some of the businesses or one of them?
Oh, sure. You know, we sold RFPD. Wendy came on board. We had a security systems division that had come from camera tubes and monitor tubes that we built into security systems that customers wanted to buy. And we sold that business to Honeywell for $75 million in 2007.
Yes.
And then we sold the commodity semiconductor business to Arrow for $238 million in 2011. We went at one time, this company was $700 million in revenue and losing money hand over fist. And we had $200 million worth of debt. And so we sold off these businesses, paid off all our debt, and basically we were down to about 140 million in sales, and still had 20,000 customers all over the world. And we started adding all of these new products to fully absorb that infrastructure. And at 160 million, we broke even. At 176 million, we started making money. And this year at 226, we made $15 million, $16 million. Even though medical lost 5 million.
Gotcha. So what would you say are also, going back to the growth opportunities, what would you say are some of the tailwinds that are driving some of the growth opportunities that you're seeing?
Well, it's, you know, green energy. If you look at the bill that's just gone through Congress, and they're subsidizing all these wind turbines and solar fields, and, you know, the big push to get off of fossil fuel. And I think that's the most exciting portion of our business, and we're just the tip of the iceberg. You know, we're just right now we've sold 22,000 of the ultracapacitor modules for wind turbines, but the total market, there are 30,000 GE wind turbines in the United States, and Siemens and Vestas have 5 times the market that GE does. You know, and we're just starting in that business, so it's an amazing opportunity.
Very cool. So I ask this question as well on every interview. You know, we're talking about the growth and some of the exciting things going on in the business, but we also want to get the other side. So in your opinion, what would you say are some of the company's downside risks?
Well, the biggest one we have, as I mentioned, our largest customer at the moment is Lam Research. And, you know, we've sold Lam clear back to when Novellus, they bought Novellus, by the way. So clear back in the early 2000s, we were in that business building RF matches and other equipment for semiconductor wafer fab. And every time you went from 3G to 4G, that business would go up and then it'd go off a cliff. And right now, because of the shortages on integrated circuits around the world, our business with Lam has gone from 22 million to 27 million. At the rate we're on, it'll probably be 35 million this year. But we also know that can go in 2018, 2019, it went from 22 million to 7 million overnight. Fortunately, you know, you make hay while the sun's up, and the business is there right now, but we also know that's a really secular business. But the other businesses are so stable, like the tube business is incredible. Customers all over the world, they make up for it. But if there's any area that could really fall off the cliff, it's that business.
Where do you see the company in 3 to 5 years? And what would you say are the inflection points that will get you there?
Well, I think that we'll continue to grow with all the, the backlog we have. As I mentioned, we went into this quarter with a $206 million backlog. I think we'll grow at about 15, possibly 20% a year. And if you just run the numbers 5 years out, that'll be $450–500 million. And if we can get healthcare to be a contributor to that, we'll be very profitable.
On the healthcare side, I mean, what are some of the things that will help get everything over the hump?
If we can develop these Siemens tubes, Siemens is 10 times the size of Toshiba in the market, and their tubes, if you don't have their equipment on contract and you want to buy a Siemens CT tube, they charge over $200,000 for them. So we think that there's a real opportunity there as we can develop replacements for those tubes.
Got it. All right. I only got a couple more questions for you here today. So like I said, you've been going to all these conferences, you're doing all the one-on-ones and everything. You've had lots of conversations with many folks that I know in the business that I truly respect in MicroCap. How much, if at all, have your shareholders influenced your decision-making process, if at all?
Well, they wanted us to buy stock back, and we did. At the time, we bought $65 million of the stock back. And at the time, I thought we paid too much for it. We probably blended paid about $9, but with the stock being $17 today, it doesn't look too bad. But we try, if we can, to disclose as much of the information as we can so they can make intelligent investments. And even though it's a complicated story, there's so many growth areas within the company that, as I mentioned, it's taken us 60 years to get it right, but we've never seen an opportunity like it has today.
Very good. All right. So one of my last questions for you today to close this out. The company's been public for well over 30 years. You've been in the company for about 60 years. How has your thought process about being part of management of a public company, how has that changed over time?
Well, I can honestly tell you, there was a period of time when the stock was down at $4 or $5 that we looked at going private. And the only problem with that was the only way you could do it was in, some kind of a venture capital fund to come in, and then you were no longer your own boss. So we just stayed with it. Today, I'm quite happy to be public. It's really refreshing to have a $17 stock.
For sure. All right. So my final question for you, you have a book coming out about the 75 years of Richardson Electronics. Can you tell us a little bit about that and why you decided to write a book about the company's history?
Well, it was our 75th anniversary, and we just really wanted to tell the whole story of the company and the people in it that have built it and made it successful. And there've been a lot of tough years, and it makes a really good story. The title of the book is called Never Give Up. So we'll send you a copy.
Oh, absolutely. So I'm guessing the longest chapters are going to be explaining each segment of the business, right? Of course, like that.
Well, it's no more a story of the family, and some of the story I went through, and some of the hard times we went through, and some of the fun times we went through, and we tried to recognize all the people that have been here. We have lots of people that have been here 25, 30 years, that have really been instrumental in helping us get where we are today.
One last question for you. I have to ask, you're an American company, a lot more companies within the US want to stay domestic. I mean, has that been a tailwind for Richardson in that they say, hey, you know what, I want to work with the best the best engineered solutions company in the US. I don't want to farm it out. Has that been something that's been coming up quite often?
Well, not too much. As I mentioned, 60% of our business is outside the United States. So we do a lot of business in the United States. And now with the wind turbine business and Progress Rail, we're probably going to go more towards, 50% each international and domestic, or maybe in the future, it might even be more domestic, but we'll have to see.
Except Progress Rail in particular, that's what they're doing with the rail cars here. They move those here. They want to make them in the States.
Right. Yeah. Progress Rail is moving manufacturing back to the United States because the U.S. railroads want U.S.-made locomotives. And that business could be huge. It's just amazing.
And semiconductor development in the United States could grow that business too.
Yeah, and then, there's a real push to bring semiconductor wafer fab back to the United States as well. That's in some of the House bills that are coming down, subsidies to build semiconductor wafer fab in the United States.
Very good. All right. I think we covered quite a bit today. So I want to close off by saying congratulations on 75 years to another 75 more. I can't wait to read the book. And where can our audience go and find more information on Richardson Electronics?
Well, we have a website. There's a lot of information out there, and the easiest thing to do is call us. We're a very flat organization. There's about 5 of us that run the company, and we're happy to talk to you anytime.
Perfect. And I also would like to thank Wendy Diddell, COO of Richardson Electronics, back there with giving us a lot of good insight as well. And Ed, Wendy, thank you so much for joining me today. Really do appreciate it. And I look forward to our next update.
Thanks, Robert. It's been good.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.